The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 26th day of July. My pleasure to be here. Thank you to our hosts. Hopefully we can keep the stand up here. Straight off this, you've got Think or Swim. Terrific show. Really so fascinating the way they go into fundies and technicals and options, positions. Really very good. Then, of course, you've got Steve Rhodes. Steve has been a terrific resource here and fabulous call on the NASDAQ from, I think, just about the low. Really good call. Then, of course, you've got Dave White, our technical guru and high-tech guru as well, giving a webinar tonight. I believe it's, yes, tonight, 5 o'clock, 5:30, 5 o'clock. Go to the front page, TFNN, check it out because Dave does some absolutely fabulous work in terms of doing research that is technically based and then assessed on a purely technical, unemotional level, and just really loves to delve to get to use the resources available. And that's really what I think the webinar is going to be about, how to use the resources that are now available in the technicals in computerizing. And that should be fabulous. So check it out. Then, of course, you come back to Tom O'Brien, terrific, our gold guru as well as our technical guru. So Tom, 3 o'clock to 5, Wednesday today. We'll be back tomorrow, of course. Tomorrow is an even fuller day. You get Andy Hecht. So this is your resource, let's hope, for technical analysis as well as just plain old learning how to read charts. Now let's read the chart by saying, in the Chapman wave methodology, there's a particular formula that I discovered a very long time ago. And that formula essentially said that I was looking for what I really called in the very beginning the 7-wave form. And what was that all about? Essentially what we were looking for is from a low point to try to identify now where on earth did that go? Where is my, that's the thing about the technical aspect of, there it is, computerization. For most of us who didn't grow up just grabbing all this information and treating it as a language, everything's strange. You're doing something over and over hundreds of times, thousands of times, and then suddenly one day you click a button and everything changes. And that happened right now. Fortunately, I used my wits and I'm back again. So in the Chapman wave methodology, we look for the most identifiable lowest low bar, merely count each successively higher peak, alphabetizing them, uppercase A, B, C, D, E, F, G on the way up and lowercase on the way down. What we look for is at the fourth highest peak, other things can happen. That's where you can get a deeper pullback. That's where you can get an Chapman wave instant restart. It's a little technique that I developed a long time ago, and it really is a fantastic technique because it can take you to a whole new buy mode with another 4 peaks. In fact, if it does that, it usually goes to 5 peaks, letter E, before coming back down. All right, so there are your 4 peaks, and now let's look at our live chart. This is the E-mini. Makes a low back in 2402.25. That was like July the 3rd, was it? June the 29th. And it runs at peak A, peak B, peak C. And I'd say we're anticipating a leg D to the upside. And there's a dashed line, and it went right to the dashed line. It's making that plus sign that looks like what we call a doji candle, opens and closes about at the low. We haven't even done 2 hours on the day, so I can't call it the days as if the day's closed. The MACD is good. The stochastic, the MACD right there, moving average convergence, divergence. Stochastic is really good at 91%. Anything over 80% is good. If you look at your technical analysis books, what they almost always say is above 80% is overbought and below 20% is oversold. I say baloney. There's no such thing as overbought, oversold. Only when you get to the 96, 97% are you beginning to become oversold, overbought. And what we're really looking at here is that anything over 80% is what you want to see in a bull market, in a bull phase, because as long as it holds over 80%, that's good support. Well, the weekly chart, that's the middle chart, leg E. NAGD is about to cross positive. Hasn't done it yet. So 50, 49, 50, 50.19 over 15.25. I think we are getting very close. We are very close to crossing positive. The stochastics at 90%, that's still very good. One of the reasons why we went very heavily long yesterday on the Dow is because we were expecting, and this is the 120-minute chart in the E-mini. There's your peak D. The last peak D at 24.7625 at 10 o'clock on the morning of the 20th of July. Saw a sharp pullback down to the 24.62 area. Now we're back at 24.78. The high today so far is 24.7975. Trading right now at 24.76, up only 2. Big divergence. Dow spiraling higher, up 115 at 21,729. Let's go to the Dow. I'm going to run these numbers quite quickly now. The Dow. We were waiting for leg D. We've got leg D. We're waiting for a test of this resistance line. We're almost at the resistance line at 21,740. The high today so far is 21,742. So we've got about 7 points to go, 8 points to go, and then you're bumping to that resistance line. NAGD is trying to turn positive. Stochastics, okay, at 74%, not great action at all. Now you've got a leg D in the weekly chart. You've got a leg D in the 120-minute chart. Now we can get rid of the 120-minute chart. And a leg E in the monthly chart. So far, everything is very positive. But there's a chance that we might see a turnaround later today or tomorrow. So I had a question. My Chapman Wave trend gauge worked fantastically. It had, on Friday, it gave a signal to say that within 2 sessions, there should be a very sharp move to the upside. We didn't get that until yesterday, and then zip, right all the way. A very strong move that didn't include the Dow. That same Chapman Wave trend gauge flashed a signal to say the Dow should have a rug pull early this morning and then start moving higher. The Dow futures, in fact, did that, but I'm very strict with this particular technique. It applies to the intraday 9:30 to 4 o'clock price movement. And instead, the Dow gapped up and is being very strong all day. Now, it's so interesting. The Dow's up 0.53%. The S&P is only up 0.09. I don't like 500 stocks lagging. So, so here's a question. Basil, I've not seen your trend for upside ever not work. Amazing. Now, there have been about 5 times over the last 4 or 5 years where that trend did not work. I'll explain it as soon as we get back, because there's a question that's come up. And what has happened, we've been up 350 points or something once, capped up, and they've had a 200 and something points decline. I think it actually down went to like a plus 47 and then closed up for the day. That worked fantastically, but I X'd it out because it didn't go negative. This particular index must go negative. So this could be a miss.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. David White has just announced a new online course that he'll be premiering to his subscribers the evening of July 26th, The Next Wild Wild West of Computing. Machine learning will be the biggest growth area for tech companies in the next 10 years. Make sure you're ready to capitalize on that opportunity. With over 50 types of algorithms and growing, Dave White will tell you why there are so many areas for companies to apply this to their business to both sell and consume. Right now, you can get a 30-day free trial to either of Dave's newsletters, Path of Least Resistance and The Technology Insider, as well as get a 30-day money-back guarantee when ordering Timing the Trade charts. Don't miss out on the next Wild Wild West of computing as it premieres July 26th for all subscribers to Dave White services. For all the details and to sign up today, visit the front page of TFNN.com.
Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
You just heard the commercial for Dave's webinar tonight. Yep, sounds really intriguing. I mean, this is really something worth listening to. So the S&P is up only 2. Dow's up 110. I mean, what's with that, right? So yesterday, the markets were all higher. The Dow was higher, but it was really lagging. It did not make that leg D. Today, it made that leg D. Then the question came up, when does the trend work? Not on the downside. It's only maybe 2-3 times it's not worked. There have been times where it worked fantastically, but it worked from lower down. That's where the trend has a very high reading. And this is Richard Arm's trend gauge. I'm being quite straightforward. This is just, I have done nothing. All I'm doing is reading numbers. I read the numbers very differently from Richard Arms. Haven't heard him for a long time, but I know that every time I've listened to them, I've had some kind of a different context, and he's the guy that invented it. But I use it in a particular way, and that's all. That's really important how you use it. So there have been times where the market has dropped sharply, and what I've said is be careful if you short him because the trend gauge is showing that there could be a 9 to 11 point rebound. That's really what it does, and that's been very accurate. So Scott in Safety Harbor. Scott, welcome back. How are you?
Oh, it's good to be back. It's good to be back. I mean, it was tough. It was tough to stay away, but.
Well, it's good. Sometimes a forced vacation is important.
Yeah, it was a disciplinary action on my part, self-discipline. What really got me interested was Facebook. I'd put a $200 call on it a while back, and I still stand by that. But the movement, what's really got me interested, I want you to look into CX, but what's really got me interested at this point is X. And
yes.
X remembers where it was a very short time ago, and it also remembers it went down for no real reason. So I really, I'm excited about X.
Okay, let's just do 3 things right now. CX is CMEX SADCV. This is a Mexican cement company trading at $9.82, down 28 cents. Made a peak D at a fantastic move from the lower 8s right up to the 10.30s. Now at 10.37 on the 12th of July, it's making an A to B equals C to D. This is the classic lightning bolt pattern, and I don't see anything yet. What I would like to do is to have a look at it again if it goes between $9.43 and $9.37, and it's a peak E in the weekly and I have it now as a leg F in the monthly. I think it might be just in a little bit of a hiatus right now. I'd leave it for now. It's had a good move. It just needs a bit of a breather. Like you took a breather, CX needs a breather. And
I used to call on my ATM, and I think it still is between that lower 9 and 10, and it blew up apparently from what I'm looking at last week to 10.25, 10.30. So it's still an ATM out there if you can catch the rhythm.
Yes, if you get exactly right. You get the rhythm and you're fine. But in the meantime, I'm just thinking it needs to pull back a little bit. X, which has been my nemesis since I keep wanting to buy it and talk about it, and I don't get in. It's up at 26.10, up $1.64 at a spectacular move. Maybe it was earnings. Went to 27.44 this morning in leg G/C. MACD is good, stochastic's good, on balance volume is rallying. Leg D in the weekly chart, and just a retracement in the monthly chart, having made a peak D way up in the 40s and pulled back under 20. So at 26, it's kind of right on the 9-period moving average. I think this is in play, and it's almost the same as CX, except it's active right now. So it's had a gap up. I think it will fill the gap over the next coming few days. It's almost, there are a couple in the group that are really good and a couple that really are struggling. I'm trying to show you that SLX, which is the steel ETF, and it may be a safer way just to buy and hold, has had a very nice move. It's getting a little toppy. It's at peak F, I think, from my eye, that there's a range that I'm looking at for the SLX, which is now at 41.15, down 67 cents. And that's between 39 and maybe 42.5, maybe even touches 43 over the next 4 weeks. I think that's what we're looking at. So there's the same sort of thing. Try to treat it as a trade. If you got in much earlier for X, you can hold it and don't worry about it. But as a trade,
what's happening with X, I think, is a lot of traders buy weaker stocks that when they start to show strength again, they won't get in at the lows like I do, and I was in X at the 20. They want to wait till it gets to that 23, 24, and they got that yesterday. So their programs are kicking in now.
Yes, right. So now let's jump over to Facebook. Facebook's earnings, is that tomorrow, Facebook's earnings? I'm not sure. But it's coming out in the next day or two. It's trading at 164.44. It made a peak D high in the daily chart on the 24th, 2 days ago at 166.17. It has a weekly chart leg D, and it has a monthly leg F. I would not be surprised. I'm not going to trade this after the bell today. Oh, fantastic. I'm not going to trade this. But if I really wanted to, I thought about it and I said, no, just leave it off your list. I was going to say, let's buy a 165 or a 160. I don't know if there's 162.50, but a 165 put, August put, because I think that Facebook has a chance to disappoint. I could be wrong. We could be looking at this and it's trading at 190 by tonight. But I think that it's going to pull back. And I wouldn't, it's just a pullback, and I would not be surprised if Facebook starts really like a big digestive phase, chop, with lower highs and lower lows, at least for about 3 to 5 weeks. That's what I'm looking at as the possibility if trading right now at 164.39, if this time tomorrow Facebook is under 158, I think it's in for a digestive phase. But I'm not trading it because, earnings reports have a way of this. It's partly more the anticipation of what is anticipated than the actual result, unless the result is really bad. And
I've never, when I go over my notes, I will say I lost 80% of the time. 80% of the time when I tried to play earnings on any stock.
Yeah,
even when it's up, it wasn't up as much as Wall Street expected. So I like to wait till it settles down a little bit afterwards.
Right. And even if you're right, you could be wrong for that because you get stopped out and the next thing you know, it's going exactly in the direction you were anticipating. So I did that years ago, and actually I did it 3 out of 5 times pretty well. And then I said, to risk 5 or 7% in the blink of an eye when you work so hard to try to make 5% and not lose 5%, it's just not worth the game. if you're in Facebook and you're long, I would say that this is a fantastic stock. Facebook, social media, just buy and hold, and that's it. But if you're a trader, this is the inflection point that the MACD is good. This is very good. The stochastic is at 95%. It's going to take a move below 159 to really change the technicals, and the weekly chart is still very good. So I decided, nothing to see, folks. Let's see what happens tomorrow at this time. I want to wait for the news, but I'm thinking there's a real good chance, based on the technicals, that Facebook is really close to consolidation in time and probably price as well. Hey, Scott, good to have you back. Thanks for calling.
Good to be back. Why don't you talk tomorrow a little bit about the VIX, because there's a lot of people stuck in the VIX or looking at the VIX. It's very interesting little player out there.
Yeah, I'm looking at it very closely. Thanks for calling.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. I'm just looking up MDX Holdings. MDX, did I write that correctly? Yeah, MDX Holdings. What is that? I can't find it. All right, I'll try that again sometime. Oh, I didn't write that in. There you go. MDX Holdings. MDC Holdings. Oh, MDC Holdings. MDC. Is that right? MDC. I'm sorry. I'm just trying to find something here. I had a question from Warren, a statement or a question the other day. and I'm just trying to, and I forgot to answer it because I had a bunch of questions afterwards and it covered it up, so I didn't see it. So MDX, MDC Partners is a business transformation organization utilizing technology, marketing, communications, advertising, data analytics. Oh, okay. So he says MDC is still on top here in Denver, Colorado area. Oh, okay. Thank you. I didn't know that one. Okay. Let's get back to our story. So what we're looking at here is the QQQ in leg C. It should, because it's all-time high, it should still get to a D. I'm not sure how it's going to do that. MACD is very good. Stochastic's very good. So it might be just, and this is a fascinating thing. Remember I talk about the Chapman wave squash. And what is that? That's a technique I developed a long time ago when I started using the moving average convergence, divergence, and the slow stochastic. And one of the things that I did the reason that I have the MACD on top above the stochastic is for this very technique where I call it the Chapman wave squash, where the two come together very quickly. And then what happens is you get a powerful move. It's the other reason why I wanted to go long the other day, because when you get that, it takes you very quickly to a peak A, peak B, peak C, and A is very powerful. Then B is just a little bit higher and C is just a little bit higher. Then what happens is the stochastic usually pulls back. As it does that, and so the stochastic I call the torque, the MACD is the momentum, and that, the fast-moving average of the momentum of the MACD indicator is the one that takes you to D a little later on. So this is what I'm looking at. In the weekly chart, we've gone to a G/C in the QQQ series. This is an all-time high today. IWM right now, look at that. Leg E. E daily, I'm calling it an F for the weekly, but I've got a feeling I might have to change that F/C, and a D in the monthly. If you look at the SMHs, they did go to a new high today, a new recovery high, not an all-time high. And that is a gray C because it's underneath the 89.72 high of the 9th of June at peak F. So this is going to be a tell, because there's a chance that you get, I've seen this happen so often, within the context of the all-time high, there's a rally that takes you to a D. Excuse me. But it doesn't break to a new high. And then it turns down quite sharply. And this is underneath the peak G in the weekly chart. Leg C only in the monthly chart. Still very strong looking out. So let me put this together. We're looking at the indices getting a little bit to the toppy side based on the letters that we're using, but I don't have any signals at this particular point. So the long that we have, I don't know if this is one that I want to keep for much longer, or whether I'm going to switch to the short side. I need to see the close today, and I need to see the action tomorrow. We've got all the Chapman wave indications out of everything, except today it did not so far go negative. That would be quite a thing if at 105 right now, the Dow has an intraday slide that takes it to a negative. It's done that before, and if memory serves me correctly, it's just this month, or at least in the last 3-4 weeks, that we had a day where the Dow was very weak. No, the Dow was very strong, and the S&P 500 was weak. And that after that, there was a sharp down move in the Dow. So I'm watching this very, very closely. I'll talk about the VIX very soon, but I don't want to talk about it right now because I want to go to the TLT, which is the Lehman 20-year T-bond Treasury bond fund. And the Fed is talking this afternoon about rates. The way it's looking right now, rates are kind of stuck in this range. They haven't broken out. They haven't broken down. But we'll see. Because if the TLT at 123.23 takes out the 122.20s, the 200-period exponential moving average weekly support, that's not going to be a good sign. So let's just watch this very closely. I want to talk about gold. Gold down 4.5 at 1247. This is only a peak C pullback, and it's holding the 9-period moving average of 1244. A close in the next 2 days below 1242 would say, nah, going down. But a close above 1260 would be very positive. It would be leg D in the daily, but it really helped the monthly. Crude oil. Crude oil has been all over the show, but it's actually up now. It's up 62 cents at 48.50. This is leg C. Let me just quickly cover a whole bunch of questions I had about crude oil. Yes, this is better action. No, it didn't break down. Yes, it's making higher highs and higher lows in the daily. Yes, it's making a V-shaped recovery in the weekly. The MACD in the weekly, it's on the cusp of crossing positive. Stochastic's gone from under 20% to 31%. That's good. So I'm just going to make it real clear. The chance to break down was 3 days ago, 2 days, yesterday, because of the 3 days ago candle, and it hasn't. Instead, it's broken to a new recovery high. It is I would call it a resistance area right now between 48.50 and 49.50. But if crude oil goes to 49.75, even just intraday, there's a good chance that 50.36, the 200-period exponential moving average, will suddenly become a magnet. So I had a question about rig and a bunch of things like that. Rig is holding okay. It's not doing as well as crude oil itself. Halliburton, HAL, just pulling back. Schlumberger, SLB, boy, we used to talk about this all the time. Holding the 9-period moving average, a very mixed market. Now, let me just say that if you are a person who's been following the oil service sector a lot, and you have a more positive bias, then something like an SLB Schlumberger, which has held the 200-period moving average in the monthly, it's trying to tackle the 9-period moving average in the weekly for the first time on a closing basis this week. It's already done it twice in the last 2 months. Since, since it broke down back in February. It's trying to do that 3 times. It's had a candle with a wick above the 9-period moving average, then it closed sharply below. This is the first time there's a follow-up, a green candle so far this week. So yes, I think Schlumberger is probably the better one in the group as bounce material. So yep, if you are interested, you could take a nibble right here at 67.77 on Schlumberger. I'd put a stop in at 66.30. Give it a point and a quarter. But if it goes anytime in the next 2 days, if it's trading at 68.36 for more than 2.5 hours, there's a real good chance it's going to try to work its way to the high of 4 or 5 days ago of 68.96. I'll be back. We want to talk about the financials and a number of other aspects. Basil Chapman, Target Technicians out. I'll also talk about my upcoming webinar a week from tonight. And this is an exciting period for rotation. I'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Will interest rates continue to rise? For bold trades on U.S. Treasuries, now may be time to take a closer look. Trade TMF or TMV, Directions Daily 20-plus year bull and bear 3 times ETFs, direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, we're back. So I just wanted to cover a couple of things with gold. Gold has held the 9-period exponential moving average. Silver has held the 9-period moving average. Silver's only in leg B. Gold is, in the daily, gold is already at peak C. So, in a sense, silver's telling us that it is robust, it is working together with gold. Sometimes they diverse, there's a divergence. But most importantly, I do want to see them moving together. And silver's chart, let me just do this, SI. Silver's weekly chart is way weaker than gold's. So it's important that silver confirms any move. By the end of the day, if the Fed says something that really triggers silver from gold from going -4 to a +4 by the end of the day, that's going to be really good action. I'm afraid I've been looking at some of the gold stocks. GG has held the 9-period moving average, has made a peak B. This is a good candle for the day. ASA is the one that I follow closely. We don't usually buy it, but I do follow it very closely. Holding quite nicely, but nothing great, nothing strong yet. So, and if I look at the DZZ, remember the inversion, the 2 times, so far it still seems to be in a down move, hasn't been able to cross above the 9-period moving average. So far gold is holding well. It isn't holding well. It isn't leading like it normally does when when the thrust is towards the upside. So I'm kind of hesitant here. We're out of our gold stock. I made a really tight stop, and we're kind of done. I need some really good veracity. I want strength. I want to see technical strength. And I think if that's the case, you'll be able to get on to the gold, even if it rallies, because it'll keep moving up. I don't want these 1 or 2 day pops and then drops. Okay, question about the XLF. XLF is the S&P Financial Sector Spider Fund, made a leg E in the monthly, making a leg C. I'm calling it a C for now in the weekly chart, brand new buy mode, unfolding based on the technicals. And the daily still says, hey, this is a great gap to the upside yesterday, but that gap is liable to be filled. I'm calling it G/C with maybe one little pop to the upside. We'll see. But in the meantime, we've not been able to get back into the financials. We were, and we got taken out, and now I just have to wait. And it's acting pretty darn well considering. And if you look at the TNX, the TNX has had a nice move here, and it's suggesting that at 23.34, there's a 10-year T-note This is the price at 23.34, 2.334%. If it holds, and by the end of the day, it's actually at 23.47, up maybe 13 cents from here, I'm going to suggest that we're going to have a leg C, and that yields, in fact, are going to be climbing, and the TLT is going to be declining. So the parameter is real simple. TLT closing under 122, just give it 122. In the next 2-3 days, very negative action. Yields are going much higher. The TLT closing in the 124.50s says, nothing much here. Just chop, chop, chop in a sideways formation. Okay, I think I've covered the things that I wanted. Oh, high-grade copper. High-grade copper has actually had a very good move. HG. Whoa, look at that. Continuation of the move from yesterday. Very nice. Copper is saying to us, hey, things are not so bad around the world. There's an improvement. It's in leg D in the monthly already. That's very good action. Congratulations, high-grade copper. So that's that. So Goldman Sachs, what was the question? Goldman Sachs. GS, JP Morgan, C, WFC. Let's do some of them. Yeah, so Goldman Sachs, just to bounce up $1.47. If it gets to at 223s, if it gets to 226.50s by Friday's close, I'm going to be impressed. If it just fails to do that and comes right back into the 221, 220 area, it says, nothing to see here, folks. Next thing we're looking at is the XBD. I want to look at the XBD because that is the broker dealer in leg D to the upside. See how many Ds there are? So I'm thinking that we're getting very close to some kind of a pullback. Now I can go to the question on the VIX index. The VIX index at VIX is trading. It traded yesterday at an all-time low, 9.04. Give me a break. 9.04. It's trading now at 9.41. So 9.04. That's just an all-time low. Even if I go back to the Dow dollar VXO. Whoa, put it in the right place. And that was at 170 once upon a time. XVO. No, dollar XVO.X. They still do that in some of them. XCO. Dollar XCO. $XCO.X. Boy, this can go on forever. Why am I not getting VXO? Dollar VXO. There it is. Dollar VXO.X. There it is. I knew we'd find. Oh my, down at 7.75. Look at this. I'm going to have to redo this. It's so unfortunate. I've lost my notations on this. I had things down. The 1987 high was, look at this, was 178, wasn't it? Somewhere around there. 172.79 back in October the 1987. I mean, really, is that something? And now we're at 7.75, and the Dow is at all-time highs. And the Dow went from 2237 or something like that down to 1336 that day, and the VIX went to 72, and now the Dow's at 21,772, 21,724, all-time high, and the VIX has just gone to an all-time low at 6.32. That is an all-time low. That is an all-time low, at least for what I've got from 1986. So interesting. Okay, enough with that. We want to get to the next question. Yes, so the banks, this is going to be very important. If the yields go up today into tomorrow, then the XLF is going to go even higher. And that's all I can say. And you will get a nice bounce in Bank of America and these other banks. But now look at this. Visa, Visa trading in leg F maybe, or an alternate count F/C, leg E in the weekly, and leg something or other in the monthly, leg D in the monthly. All of these are getting a little bit overbought. Technically, MACD is very strong, but it's stretched. The histogram is just starting to decline, and the MACD is very strong at 91%. But I'm suspecting that we're getting close to some, at least a little bit of a consolidation, whether it's just a short-term pullback or something deeper, we will know in the fullness of time. Yes. So next question I had was Boeing. Wow, this is a great one. Look at this. We'll be back straight after these messages. And then I'll talk about what I'm going to be going through in my webinar coming up week from tonight. Very exciting period, this. Leg F, Boeing gaps up to a leg F. Leg E in the weekly. Leg D in the month. Boeing. Go.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks, we're back. So Dow's up 107. You can see Boeing. Look at this. An amazing move. Up 18 points. At Boeing, 18 points. Up 8.59%. I don't know what the news is. What, have they been taken over? Some country's taking them over? I don't know. Whatever it is, it's amazing. That's the reason why the S&P is only up 2 and the Dow's up 105. Real quickly. So Boeing's at an all-time high. XAL's down. Yeah, because of the different relationship. One has to do with defense and stuff like that. But most importantly, GD, General Dynamics. Yeah, so now's General Dynamics. Let me do this quickly. Sharp move down. Leg D goes to, I don't want to get into it. I had a D and I had the cup formation. I was looking at all of these. I was looking at Raytheon, and I said to myself, wow, if ever there was some vulnerability, these guys are vulnerable. Everyone says to buy these defense stocks. No, Trump is in the position here. Remember when the peace president Obama got in, we all thought, oh man, these defense stocks, it's the end. They had the most incredible 8 years. So now you've got the guy that everyone thinks is going to go to war, and I think these stocks are kind of vulnerable. That's the irony of markets. So yeah, good General Dynamic. I looked at it 2 days ago, and I said that's a leg D, and I thought to myself, wow, I wonder if it's even worth thinking about a longer-term put. And then I said, no. Maybe people are right about this whole defense thing. No, it's down 9 points, down 4.56 at 194. General Dynamics. There's something going on here that's really important. So I would not be surprised if we're getting real close to some kind of a pullback. So I've done the TLT. Intel is in leg C. I just don't think it's going anywhere right now. Next thing is Ulta. I haven't looked at that for ages. Remember, we had a spectacular move once in Ulta. We were short and correct. Ulta Beauty Inc. Goes to, I call this a G/C in the monthly chart, F in the weekly chart. No, Ulta is in real trouble, down 8, nothing there. It's a real problem chart. Something's wrong. Telephone, you see, this is it in the wow, look at telephone up $1.64, 37.86. Then I kept on trying for the Visa of Verizon and telephone to see if they could be dividend stocks. That's a great move. I don't know what's going on. Telephone up 4.53%. Very good move. I'll have to figure out what's going on there. These are the defensive types plays. And the final thing will be we did copper. Call on the SPY at 265. Wow, SPY at 265 is trading right now at 247. So that's quite a bit higher. Yeah, no, I can see that. A call over the year. Yes, a long-term call. Sure. Shorter term, I really think we are very close to at least a digestive phase. We'll see. So now my webinar coming up is going to talk about exactly this. It's right there. So tonight is Dave White. Mine's Wednesday night a week, and it's going to be discussing the sector rotation. Is it possible that sector rotation can keep the market up for the next, right there, opening call? Can sector rotation keep the market higher through the rest of the year going into 2018? I'm going to discuss that in great detail. I'm going to also discuss the sectors that I think could do nicely, and that's going to be very important. What the Fed does today is going to be important as well, in terms of the looking at the TLT bonds, yields, etc., and everything that's related to it. So this is the opening call 2 series webinar, August the 2nd and August the 16th. So please go to the front page of TFNN, check it out. I think that this is going to be a really important 6 months. This is probably going to be the most fascinating 6 months coming up. If you thought this was interesting coming in to January to June, you'll see what we've got coming up for July to December. So Basil Chapman, Tiger Technicians Hour. Stay tuned for great programming. I'll be back tomorrow. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.